Yesterday's YouTube video, we had a shorter video, and that was just because we knew that there was a very, very small implied volatility, aka a small daily expected move for the stock market today. So the sensible thing to happen was for us to start to consolidate or dip down and then curl back up. We'll see about those things as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta, looking at AMC and GME as well, as those things are pretty bottled up, and we could be seeing something big from those at any moment, really, since they're so bottled up at this point. But we need to pay attention because things are a little bit different here, so let's just get right into it with the SPY for your daily expected moves for tomorrow. We're gravitating towards a weekly expected move. First off, you need to keep that in mind, but 562.89 to the upside, and then we do have 554.51 to the downside. Okay, so these are our expected moves. They've spread out a little bit. You have about double the implied volatility that you had today, so we will actually probably see some movement. Now, there may be confusion. There may be people trying to guess what's going to happen before we receive that FOMC, but a lot of this volatility, we might see this pretty dry until we see something with that FOMC decision. So we'll pay attention to it, most likely, as we didn't necessarily gravitate exactly to a daily expected move today. I assume that we're going to hit one of these moves tomorrow and maybe even exceed one of them if we get some good news from the FOMC. So we're paying attention to a lot, but right now, what is the most likely thing to be happening? Well, it's the same thing, right? The same thing we've been saying live. Please join us live. Make sure you're subscribed for that, because we talked a lot about how things are performing here and how we really, to be a diligent trader, to be a good trader, we need to understand we just made a great trade, right? We called the bottoms here. We said this is a high probable move for a short squeeze. That happened, and we benefited from that, which is fantastic. But now what do we do here as the MACD is way overextended and we're way up here on the RSI, been overbought for a long time, or at least for a couple of days, and that can continue as daily momentum is taking over. But for the most part, there are pullbacks in strong moves, and you kind of want pullbacks so the market can remain healthy. You're not just climbing up a hill and then you drop off a cliff. So what we'd really like to see is the same thing we were talking about this morning: sideways price action or a pullback to go gain some buyers, maybe retest a key level we just broke out from. That would make some sense with what is going on with this MACD as it is starting to finally curl down. Now, it doesn't mean it can't just like turn right back up and go positive, so you want to be ready to react, but would that be an overall good time for a trade? Remember, we're talking about trade, not a long-term thing, just a trade, right? So is that going to be a good thing for the next, say, 5 days? If this were to curl down and then curl right back up, does this have a lot of steam to the upside? And just according to our weekly expected moves, well, the upside you have from here with the SPY is overall somewhere around 1%. Okay, so 1%, you could potentially end the week at the highest point of those weekly expected moves. That would be up 1% by Friday. But you can notice that this is going to be a risk to reward. Your risk is that you experience some kind of drop of 2.45%. Okay, so you can tell that as you're at these levels, it is a diligent thing as a trader to wait for consolidation. We talk about patience in the course. Those courses are 90% off, $100 until the end of August. So you only have a few days left. You really have less than 2 weeks, like 11 days to grab that. So I'd get that if you're trying to learn in these markets and be a part of moves like this one, because if you were paying attention to the YouTube videos, if you've taken the course, then you notice those signals for Nvidia and things like that. So really right now, we do have a little bit of a change from yesterday. We do see this actually giving us a blip on this MACD, which is that going to continue to push us sideways, or are we going to consolidate further, maybe go down, dip up, and see this kind of be range bound for a minute? We'll pay attention to it. Most likely from this area, we are going to be moving sideways or seeing some kind of small pullback, right? Small pullback is the main thing I want to pay attention to, because this is not an overall reversal crash signal. Anyone that is out there calling a crash right now from this price action is not being honest with you, and they're just guessing. I'm just going to be honest with you. They are just guessing if you're saying like we can crash. I know there are plenty of fundamental reasons that you can crash, but those fundamental reasons don't necessarily affect the market right away. A lot of the time they try to trick the retail traders by getting them in at the highs. So what I'm going to be paying attention to, and I thought this was important to tell you because it will show its face most likely if we're going to see some kind of top near our all-time high. Okay, if we do pull back and we get this to pull down towards the center line and we curl back up and we create that form of weakness, some kind of signal of weakness, that is when we will pay attention. But is this going to lead towards some kind of pullback for a handle at this point, or is this going to be something more dramatic? Well, the way that I like to treat it is I say this signal is very bad and this can roll over a daily chart. Why would I want to pay attention to a 2-hour signal like that up in that area towards that high? Well, because my daily chart, if that were to curl over and we get up to that level, you would have divergence up there. You would be still pretty close to that center line. You'd be closer than the last time you curled over, and that ended up being pretty bad. So if you do something like this and get that 2-hour signal and you roll down, that could be worse than you expect. And so you want to treat that as, ooh, this is really, really bad. But if that would turn back around, that would be a pretty solid look to head higher. That's what we're going to figure out over the next couple of weeks, but I want you to be aware of that. Looking at the Qs, now one thing to notice about the Qs is someone asked today, hey, do the SPY and the Qs have to go up at the same speed? And the answer is no. A lot of the time you'll actually see the SPY go make some kind of divergence while the Qs set up a lower high, and that makes sense with the weekly expected moves being where they're at. So we're paying attention to that level very closely. You know, we talked about this actually in the past. We found moments where we got a lower high, right? So I believe it was this area where the SPY actually went up like this and the Qs were not confirming that upside anymore. So that is where you can see that difference. We will point it out during the live video if we see it live, or in the YouTube videos after market close. So, but you can see where this MACD is. It's starting to go positive. That is fantastic. But if it were to roll over soon, that would not be fantastic. You do have a shot to test this low, go make a new one. So you have to be aware of reversal signals. Where could those reversal signals take place? By our daily expected moves, okay? So we have to pay attention to those. Right now, moving sideways, you see that blip down here on the MACD saying, hey, it is likely for the 2-hour to move sideways or pull back. So pull back with time would mean moving sideways. Pulling back with the price action means we dip down to test a level and gain some buyers on the way up. And that would be something very healthy to do at this point. So that is something to pay attention to going into FOMC. People getting a little bit excited, but we'll talk about the dollar in a little bit because that thing is still coming down. So we are really pumping money into something here. Even throughout all of today, we saw that dollar mainly moving lower, which is kind of makes sense, right? Dollar goes down, stock prices go up. That just makes sense if you think about it very, very simply. Now from this area, we need to pay attention to our daily expected moves, 485.45 to the upside, and we do have 475.07 to the downside. So a little bit bigger range than today, not double like the SPY, but still just a little bit bigger range. Remember, we land in here 68% of the time. That's why when we got a really thin range all of a sudden from the Qs, we said, today might be a pretty boring day, and it kind of was. It kind of was. It's just a consolidative day. So we're paying attention to that. The 2-hour curling down, this is a good sign for some kind of pullback or pullback with time, right? Just pay attention when that MACD gets close to that center line and gives you that next confirmation. This could just flip up. We're currently still in a short squeeze, and this can be something to convince people to get more shorts and then use that liquidity, use that as fuel to actually head higher. So we'll pay attention to this live tomorrow. Something we can look at is a 30-minute chart. We see that this has curled down on the MACD. Where is it? It's getting closer to the center line, okay? So when it gets closer to the center line, especially if we keep moving sideways, you really have to pay attention if this just keeps going and starts to curl up. Even if we move sideways and that curl up happens, that can be the next move higher. But just a note, you don't have much upside left that is priced in by the options market unless we are going to see something crazy. But I believe with this upward price action, we still can see something crazy. I'm just not leaning towards it at this point. I'm more leaning towards at least some kind of 30-minute tag of this, and then we start to curl things back around if people really pile on the shorts. Okay, so we'll pay attention to that going forward. Going into the actual stocks, Apple doing some great stuff here. This is what I'm talking about when I'm talking in my live videos about when to pay attention, okay? Short squeezes. I'm going to teach you something about short squeezes. You'll see a ton of divergences. So which one do you want to pay attention to? And the truth is, the one that's the closest, once you start getting closer to the center line, these 2 points are where you want to start to pay attention because these can roll over 2-hour charts. Now you have built up, you're holding above the previous resistance, now becoming support. So if you you wanted to, you can turn this right back around. Okay, so I just want you to pay attention to that. What do I think? I still think that it would be healthy for Apple to make that dip down, and you kind of see the structure that Apple would create if that happened, right? You kind of have this left shoulder here. If we were able to dip down a little bit lower, maybe fill a gap or something like that, you could curl back up and then create the structure to head higher. And I would really like that look from Apple. Let's take a peek at this on the 2-hour chart. We just noticed that this thing is cooked and it says, hey, I'm pulling back, but what do you notice about the price action? It starts heading up. So when you start to see this on a 2-hour, that's when you go in, you look for that 30-minute divergence that is very close to the center line. That's when you want to pay attention. It's something we go over in the course a little bit, and you can pay attention to those things as volatility is higher. It's not really as high anymore, so you could get a minor pullback. All right, so if volatility was higher and this signal was forming, we could see a big pullback, we could see a big drop, but volatility has subsided down to 1587. So that means to me, this could be a brief pullback. And if people really get convinced here that this needs to crash down, well, we'll be paying attention to it. We'll look for that rigged behavior live. So make sure you join us. Thank you so much for subscribing and being a part of this community. I really appreciate it. Now, Tesla did a great thing. It did a great thing, and that was actually give you the positive price action. Now, we have, called this pretty much to a T. We said the 30-minute divergence. We noticed there's no 2-hour divergence, but the 30-minute divergence looked pretty good. It took a little bit more time than something like NVIDIA. It came up to this zone. We said when we get to this zone, we have potential to get that retest. We got the retest, then we curled back up. This is exactly how it ended up playing out. It doesn't mean, I said this live, it doesn't mean we're magicians or anything like that. It just means we're reading the signals very, very well here. We're reading the price action very well here. So what could happen from this area? Well, if you look across the board, it looks like everything needs a 2-hour pullback. And then you look at Tesla, where did it go to? It went into some liquidity where there could be some sellers lurking. This can be some resistance in this area, even though I think we'll end up getting to this and forming this. It doesn't mean that we can't dip down first, curl up, and then form that. So we're still paying attention to this type of look. Tesla has crossed up on the daily MACD, so that's something to pay attention to. But you can see that 2-hour has the same look of a lot of stocks across the board, and we might need a more meaningful 2-hour pullback soon to gain those buyers to actually head higher here for Tesla. So that's what I'm paying attention to. If we see upside, we're gonna have to change our thinking a little bit, but that's perfectly fine. Looking into the 30-minute, if this thing curls up, hey, positivity can be there. You've pulled back a little bit, and that's enough right there on the RSI to give you that room to actually head higher into this zone, and then maybe you start to form that right shoulder. So those are two things you can pay attention to with Tesla. As we go over into Amazon, we're just seeing this leak higher and higher and higher, really pulling back with time here. I know you see the little divergence going on here, and that could lead to things rolling down, but overall you've pulled back with time. If this 30-minute wants to curl up for a moment, hey, we can go maybe fill a gap. Okay, so I'd pay attention to that going forward. As far as weakness goes, 2-hour, if we need a bigger pullback, hey, I'd first pay attention to that 174.51. Look at how we gapped above that level. Remember, we've been paying attention to this level for a very, very long time. And we've been using it ever since, right? We used it again here. We said we most likely come down to here. We said during this drop, hey, we most likely come down to here. And what do? We gap below it, a big, big gap there. So filling this gap might be on the table. We'll see if a 2-hour pullback comes first, but this one has not curled over on its MACD. So right now, these charts here are telling you it still could do that trickling up behavior until it needs that pullback, until that target's hit probably for that market maker. So looking over on NVIDIA, we just noticed that this thing was able to break out of the trend between the two highs. That is a good sign, but if you head a little higher, you might need that retest. So really leaning towards breaking out of the zone, retesting in it to gain those buyers, and then heading higher still. But we can see this 2-hour is way, way up high. So anytime that this 2-hour turns back up, you have to say positivity. As of right now, the MACD is telling you NVIDIA might experience a 2-hour pullback. If you look at a 30-minute though, things can change, right? The shorter the price action, the more changes that can happen very quickly. So if we're going to continue to pull back with time, kind of some flagging in here. So if we just wanted to go retest something like 125 and then turn right back up, well, this 30-minute would curl down and curl up into positive territory. So as you see those divergences start to cross the center line and then that curls back up, those divergences start to get invalidated and you can go make another point. And something key to understand about these little 30-minute divergences here, it's not on the RSI at the same time. So overall, this is saying there could be some kind of 30-minute pullback, and this might not even be the moment for that 2-hour to experience more weakness. Now, if that 2-hour does make a divergence, we'll still pay attention to it, but it's really up high. AMD, this thing saw some great price action. It got all the way up to our 160.83 and then started to fade. I think that was a little too excited. I think it needed to get to this area for sure, but this area right here would have been nice for a pullback. You break out, you test a key level, then you curl back down, and we could see some great things from this because people really would have been faked out if AMD saw a bigger dip. We don't see divergences, nothing like that, and the 30-minute isn't even close to the center line. So if this is going to see something bad, well, then that better be some random black swan bad news that just caused this to go down, because these signals are still bullish, telling you you're in a 30-minute pullback. We break through a zone, maybe we go tap our feet on it and jump off it like a trampoline, and maybe this is more what we're looking for in this area, some kind of cup and handle, even though that might have been violated slightly. That looks like the look at this moment. What you can pay attention to with your signals: 30-minute curls down, curls right back up. That's when you know, hey, 30-minute says there's more positivity to be had, as long as that remains positive. But you can see this 2-hour getting really cooked, pretty much 2 hours cooked across the board. So either moving sideways or even slightly down to get those buyers. I think that's the most likely thing, and paying attention to this if we do experience a rollover, seeing that curl up. But right now your MACD is still saying, hey, I'm positive, I'm still going. So shorter time frames might be a little bit more important to pay attention to initially. Meta, as we look into this one's a little bit different, and I'm going to zoom out on this in a second, but the 2-hour has experienced that consolidation, I would say, at this point. And if that curls up at any time, you would expect more positivity, but you're hitting your head on a key trend line right now. So Meta is one of the stocks that it's getting really, really excited really fast. And something about Meta is just telling me maybe I need to be a little bit aware of reversal signals here. That's just all I'm going to say about it. I'm going to be paying attention closely to reversal signals over the next week, because if we can make it through the next couple of weeks, we could experience more of a bull market going forward, maybe into the end of the year. But if we experience some weakness, that's where things can really gain some trouble, because this daily is way up high. You're pretty much getting almost a triple top across the board, and you're coming just a little bit lower than this one. So is this some kind of huge head and shoulders, really building a lot of liquidity before this hits through the floor? So that's something I'm worried about. If you're worried about it too, that's perfectly fine, because it's justified with what's going on in the world. But what you want to pay attention to is, are your signals actually confirming these things? Are your signals turning down on a daily chart? Or is that daily not able to curl down, and this 2-hour just curls down a little bit further and then turns back up? That still would mean positivity is there, and then you want to watch out for that reversal signal if it forms one. I think that's likely, so I will be paying close attention to it and trying to keep you informed. As we pop over to AMC and GME, what are we noticing? This is something that can really blow up the market. And I just want to be honest with that. This is something that can shake up the market. There's a ton of problems going on in AMC and GME as far as the derivative market goes. And so if this is ever able to curl up, and I would say if it curls up on this 2-hour, it's got a good shot of doing it. If this is able to curl up on a daily, I know I'm a broken record, and I've been saying it a lot, but you notice how tight this is getting. And as it's getting tighter and tighter and tighter, what's happening is you're getting a lot of barcoding where this thing is not allowed to move. The volume is not allowed to hit in this area. So you are super tight in here. And you notice that the moving averages have crossed the 200. A lot of them have at this point. So if you get one bar like this, you might cross on this MACD and just see something crazy if you can get above 536. That's really what I would be paying attention to with AMC. And if I was someone who wanted to pick a time, where there's 10 blacks in a row, and I want to say, okay, eventually it's got to be red, right? This would be kind of that time. So this is what I'm paying attention to at this moment. I actually did add a monthly AMC option play just because I was like, if this does happen, I want to benefit from it. I'm still holding both of the stocks, but I just want to benefit from it on the option side of things if I can. So looking at GameStop, similar story, already curled up on the MACD. And the key thing here, though, was the 2-hour chart curling back down. So this is still relatively positive, right? You can see it's in positive territory, so you still need that 2-hour to curl back up, but we can see that it did drop down this morning, and it looks like downside might be the most likely option at this point. So if you want this 2-hour to curl around, hey, sometimes you got to see a 30-minute divergence to the downside. We're not seeing that at this moment, but overall, I think AMC will give you a good hint with these guys. Like we update you every single week on these, so make sure you're subscribed. subscribe, but 24.16 is what you got to get above to see something crazy. That's what you got to see. As you get closer and closer to Friday, though, AMC is more likely to close at $5, and it seems GME is likely to close between $23 and $20. So it's kind of sitting in the same area every Friday. It just happens. Now, one thing I did want to point out towards the end of this video is the dollar is still dropping dramatically, which is very surprising to me. This move down in the dollar is telling me, hey, the market is perceiving what's going on, and everyone, not just retail, everyone, maybe even more so institutions and things like that, are piling into the market or piling into TLT gold in the market. So some kind of asset they are piling into at this moment. Right now we're seeing upward price action in the SPY. So I believe that's where that money is going. We're not seeing that rigged behavior in any way in this area. We are seeing the dollar continue to drop off while the market kind of holds steady. So that would tell me there was buying happening. And if that is in the market, then you're going to see more upside here. A lot of people piling into the market because the dollar is coming down. A lot of people moving out of cash, going into the market. That can cause a big reaction in the market while we're at pretty much an all-time high. So it's kind of telling me the market wants to go like 10% higher, but it's also saying to me, is something fishy going on here? Because this needs some consolidation, right? Not necessarily the dollar, but the market needs some consolidation. So I'll pay more attention to this. I'll try to read into this. Usually on the weekend, I go over the dollar in my weekend update video, and that's usually when we can put some stuff together. So we'll pay attention to that, and we'll pay attention to the dollar live tomorrow morning. Now, one thing to note was, even though we had kind of a, I would say, dud day, volatility did not. Volatility curled up on this 30-minute. We said to be aware of that, and boom, we're seeing some volatility kick in, but we're just moving sideways. But volatility is turning up. The key signal here is still a daily able to cross up. You notice it's just getting to that center line. Where's that, I guess it's not price action. Where's that reading going to? It's going to its 200. Remember what we said? We said this is going to most likely squeeze. That's a higher probability of a squeeze. We said that up here. Then it crossed down and we said, now we're definitely going to squeeze. We squeeze. And then we said, now the first point you need to pay attention is the 50 and the 200, and maybe right in between there. And look what's happening right in between there. Well, we're starting to see some kind of reaction. It doesn't mean you have to see a crash though, but you do have a crash signal formed here. It has crossed. The 50 has crossed the 200. That is a crash signal if the 50 can remain above the 200. You know what really makes that 50 go below the 200 though? A short squeeze. If it can close back below this 200, you might experience more of a squeeze, go down towards 1212. But if we're going to see a reaction tomorrow, maybe with FOMC, this daily might start to gain some steam and turn up into positive territory. So that is something to be aware of. At this moment, though, if you see something like a 2 hour start to cross back down, well, you might just close below that 200 and experience more of a squeeze, as that 2 hour is still in negative territory. Volatility on the 2 hour is still in a negative trend, just moves sideways. Who's to say this isn't just flagging where this rolls over? So you got to pay attention to both sides being bullish or bearish. You know, you want to look at both sides, and that's the best way to be a trader. On this channel, we trade like water, and that's my best, advice as far as trading in general goes. Trying to teach you guys about trading and stuff. The main thing is you have to be willing to be wrong. You have to know how you could be wrong, and it will really help you out. So thank you guys so much for watching. I really do appreciate it. Like I said, the courses are down there in the description if you want to learn how I trade these things, how to trade around weekly ranges, how to really utilize them, how to take profit around them, all that kind of stuff is down there in the description. For $100 for the technical indicators course, that's the one I would highly encourage, just because it will really teach you everything I think you need to know every single week in order to trade in any kind of market. And I think that's the best thing you can do for yourself, is just dedicate yourself to some learning. So I appreciate you guys being here. Thank you for liking, subscribing. You guys are always fantastic, and I look forward to streaming with you guys tomorrow morning. So thank you. Have a good night. Peace.